All right, everyone, here is round 2 of 2021 goal settings. So I got Terrence in the studio with me. And so if you listen to the previous podcast, I gave my goals, Terrence asked questions, and now we're going to flip roles, and Terrence is going to share his goals. I get to ask him questions. Terrence, how are you?
Fantastic. I'm here. I'm warmed up. I'm ready to talk about my goals and look back at 2020, and I think it's going to be super beneficial, and hopefully the audience gets something out of it.
And right before we hit record on here, you were talking about how enjoyable it was to read it and go back because you forgot some stuff. And that's one of the benefits of writing the chapter. So repeat what you said like 2 minutes ago if you could.
I was talking to you and basically just telling you that, the last week I knew that we were going to record this, and I got a chance to go back and reread my chapter and look at what I wrote down as my goals for this year. And it was super beneficial just to be able to compare what my goals were a year ago and what we actually did. It's a really healthy exercise and something that, in coming from a sports background, people always talk about, and it's great to put things up for the off season or the preseason or whatever and then look back. And so it's just a really healthy exercise that I've really enjoyed doing the last 2 years through this opportunity, is to go back and say, hey, here, what did I write a year ago and what did I actually do? How much did I get done, and how can I help improve my focus to get more done this next year? So I thought it was awesome, and I'm excited to see how I did.
All right, well, let's dive in because you have your 2020 in review.
Yeah, I thought I'd start with just what were my goals a year ago and what actually happened. So the first goal that I had was acquire larger multifamily properties for 2020. So in 2019, the average size of property I purchased was 20 units, and the average purchase price was around $1.5 million, give or take a couple $100,000. So this year, we were able to execute on purchasing larger properties. So from the date that I wrote this, we have closed on over $28 million in multifamily assets. So we purchased $28 million. That's the purchase price plus the construction. So total asset value. And the average purchase price was $5.2 million. So we executed on what, I really wanted to do this year. There was a couple larger deals. There was one actually in February. We put under contract the last week of February that was going to be $17 million, which would have been the largest property I'd ever purchased. It was in Fort Collins. Literally, COVID happens 3 weeks later in the middle of due diligence, and there was just no way I felt comfortable executing on a property that size, that far away, with the unknown of how the world was going to look 6 months later. So we had to terminate that one. There was another deal in Inglewood that I really wanted to do.
So let me ask about that, because I remember we talked about it a lot, because that was very exciting, and also that was like a 95?
Yeah, it was 100 unit or something. Yeah,
I mean, it's a big huge property.
Yeah.
And so it was just because the world had changed, you wanted to be more conservative? Was that it?
The thinking was, Fort Collins is a market, although I believe in it, I hadn't invested in it before. So that was one. Number two is, it was a large property. We didn't have property management up there. Or three was, we were going to have construction, do a full remodel on a lot of the units. It's very outdated, hadn't been touched in 40 years. So I had three things that, just with all the uncertainty with COVID, didn't make me feel very comfortable to deploy my own capital there, much less raise capital from other people. And we were going to need to raise $5 or $6 million in the middle of a pandemic, where most people are really concerned and get very, it becomes very hard. What's interesting about any kind of correction is that even though it's counterintuitive, people should be on the offensive to take advantage of opportunity. Most people get really conservative and don't want to invest. So normally when there's the greatest opportunity, it's the hardest to raise money. So it's going back to 2008, when I started buying foreclosures at the public trustee sales, it was super difficult to raise money. Very, very, very difficult. Even for single family homes that were $60,000, $70,000, $80,000, and we were buying them at the time 30 or 40% under market. Even just buying a home for $70,000, $80,000 in Denver seems ridiculous. That's what we were buying back then. But it was so hard to find the money. There was deals everywhere, but raising the capital was the hardest part. Fast forward 12 years later, 2019, 18, 19, and the first part of 2020, capital's everywhere. Finding the deal was what was difficult. So then in the middle of a pandemic, even though there is going to be opportunity, raising the money would be a lot more difficult. So I just didn't feel comfortable with all of those variables going on. So we had to kill the deal. I think moving forward, that would be a deal we'd definitely do. We just weren't in a position in a market that we were unproven in to be able to execute on a business plan like that.
Okay.
So it was painful. We learned a lot. There was another deal in Inglewood, same kind of thing. I think it came across my desk first week of April, second week of April. And in a normal environment, I mean, that would have been right down the middle of the fairway for us. We just weren't in a position with everything going on. Similar to what you talked about in yours is I was kind of in a press pause, let me reevaluate, let me make sure that, we have reserves, we have enough liquidity to get through, if people aren't paying rent. At that point, we didn't even know people were going to be paying rent.
Well, there's that chance hey, we think we'll be fine, but we might just take a left turn and go off a cliff.
Yeah.
That's why I was worried. Hey, I don't think we will, but if we go off that cliff,
right,
I want to be prepared for that.
Yeah. So, we had 500 tenants in April, and I didn't know how many were going to pay, what the situation was going to be. So I was very much in a defensive posture, defensive in a way that was, my mentality was, I think there's going to be a lot of opportunity coming up the next 90 days. Let me make sure the next 30 days I just get the foundation. Let me bear down the hatchets. Let me make sure we have no squeaky wheels. We're not leaking oil anywhere.
Like, what did you do specifically? Because I kind of went through my financial audit. What did you have specifics that you went through that you remember? Because it sounds like we had very similar.
So I was in a unique position personally. We owned our home. I didn't have debt on my personal home. So from a personal standpoint, I had plenty of reserves. From a business standpoint, I believe we had I had two employees here in Denver. I just hired the CFO, and I think I had another gal that was running the motel for me. So I didn't really have a lot of business overhead, but we had a lot of mortgages, right? We had call it $20 million in mortgages, right, for our 500 units. So that was more of the concern for me was, let me make sure if people don't pay rent the next 6 months that we have enough money to get through this.
Yeah.
So it was just going through property by property, with our property manager, who's paying, who's not paying, what's the situation, how much do we have for this particular project, how much did we have for construction, how much do we have in reserves for every single property in Des Moines and in Denver. I did the same thing in Des Moines. In Des Moines we have a full property management team, so I think we had 10 people on staff in March, April, and May. So with my brother and our CFO, we went through every single property, who's going to pay, we reached out to the tenants, how are you doing, how's it looking? And what was interesting is that Des Moines, we collected 96% from March through today, 96% of the potential rents. So of units that had tenants in it, we collected 96%.
That's great. Even in a non-pandemic year, that's good.
In any season, any year, that's fantastic. In Denver, because we had some properties in Aurora, a little bit different profile tenant, in Denver we were probably closer to 89%. But what was interesting is that the motel that we owned, we have a 95-unit motel in Aurora, actually did phenomenal through the whole thing. I think we averaged collecting $80,000 a month there, and the pro forma was 75. So we actually outperformed the pro forma from when we purchased it, and a lot of it was due to the city of Aurora and some of the subsidies, and we were able to still keep the staff, keep all of the units rentable, and people were paying, and so that was one of the biggest surprises. But it was, at the time, there was so many unknowns. So we were able to execute. I as I talk about 2021, I think we're going to even have some larger goals than what we did this year. But all in all, I'm really pleased with what we did this year. We were able to close on, I believe, 5 syndications and do a lot of really good things that I enjoyed, and we learned a lot, and we were able to get through it. Another interesting thing is, we were able to take advantage and maybe do some of the best flips that I've ever done. We bought them in May, So, and as people know, in Denver, home prices did not really go down. They actually accelerated their appreciation, through the pandemic. So we were able to take advantage of some opportunities. In single family, we also bought and sold a multifamily property that we bought below market, and they were able to sell it 30 days later because debt was so cheap in June and July. So we were able to take advantage of some opportunities there. But similar to you, before I could do that, I had to really get defensive, press pause, and make sure that we had all of our stuff in order financially, had the reserves just in case the worst case scenario played out and people weren't paying. So the next goal I had from 2020 was streamline our bookkeeping and accounting duties, improve our back office. So as most people know that have heard me talk for the last couple of years, is 2019, I bought out my business partner for 5 years. He ran all the back office, oversaw the bookkeeping, the accounting, our taxes, everything. And so I hired a CFO. We retained the bookkeeper, retained our CPA, but replaced the most valuable person in the company. And so that was a big transition. So one of my big goals from a year ago was making sure that we streamlined that process. We improved our financial underwriting projections, modeling, all those things as we were looking to scale. And I'm happy to say that I believe that we did that. Obviously, we still have room to grow in that department, but we hired some really good people. The CFO has done really well, who, you've met, has been on some podcasts with us, Ben. And, he's in his first year of real estate. He's learning a lot, and I'm really pleased with his development. And I think the entire finance department is going to continue to improve and get a lot better. For me, this isn't my strength, so I've had to hire really good people around me. And that's why it was one of the most important things for me this year is this is not, the more time I spend in this department, it is a bad use of my time because my highest and best use is creating opportunity and executing the business plan. And I need really strong people behind me and around me that are counting all the beans and making sure everything's getting paid and everything's buttoned up. And so that's always been and will continue to be one of my really big, areas of focus is the finances.
And so you felt like you accomplished that?
I feel like we did that. Yeah,
made good. Sounds like you made great progress.
I think we made some progress, and we'll continue to get better. But I definitely feel like we improved from where we were, and especially going into a year of a big transition. So I'm pleased with that. The next one was hire a full-time construction manager. So prior to 2020, I managed all of the construction. I speak fluent Spanish. I had an army of subs that I've assembled to do plumbing, HVAC, electrical, carpentry, flooring, paint, tile, everything. And I've grown, and we've done hundreds of projects with this same group of guys and gals. But I really needed this year, as we were raising money and for the first time and doing larger projects, I needed someone to be on site every day, meet with the city, meet with the subs, oversee quality control, handle scheduling. And one of the interesting things is we made an offer to a gentleman the first week of March. The first week of March, I had interviewed him. I actually met him through a mutual friend, but we met him in February. We offered him the job first week of March. The next, 14 days later, the world's falling apart, and I had to make a really difficult phone call. I called Zach, and I basically said, look, I love you. I think you're the perfect guy for this job. I mean, he fits the culture. He's hardworking, really wants to grow, knows construction. I mean, he checked all the boxes. But again, I had no idea what was going to happen. I didn't know if people were going to be paying. Yep. I didn't know if we were going to be able to do another deal the rest of the year. So I just said, look, Zach, I can't bring you on right now. We got to press pause. You're definitely the guy. And as soon as things resume, I want to bring you on. Very difficult. He had actually already put in his 2-week notice. So it even made it more difficult. So I called him. He called his employer. He was able to keep his job. And then he calls me a month later and says, hey, listen, my company just laid off everybody. And what if I just came to work for you for free? Maybe you give me some gas money. Let me prove myself. And as soon as the world turns back on, I've earned myself a spot on the team.
Dude, what a great attitude, man.
Unbelievable
attitude.
Good for him,
dude.
Yeah, unbelievable attitude. And that was an incredible phone call. And it ended up working out. So he worked basically 3 weeks and, just as a trial. And at the end of the 3 weeks, actually, he was willing to work longer. But I just said, look, dude, I want to start paying you. You're crushing it. You've been a huge value to the, and you're everything that we needed. And obviously there's been some growing pains because it's a different kind of construction than he's used to. He was used to doing like more commercial, Class A construction. But he knew how to manage subs, knew how to meet with the city, knew how, to oversee the quality, which was a big deal for me, and really the quality that we needed for the specific business plan. And every month our construction's gotten better. We've improved a ton. We actually ended up hiring a project manager in July. But again, I believe that because of the pandemic, we were able to hire someone that was way out of our price range. That was a perfect fit, and we were able to hire him at a really affordable rate just because of what was going on. And then now, obviously he's going to be making really good money, but he proved himself. He earned his stripes. He paid his dues, and I think it was maybe one of the best hires I've ever made. I mean, I'm super thankful for Zach and the contribution he's made on the construction side. And that's allowed me to focus on, raising capital, meeting with investors, meeting with more brokers, and really creating more opportunity for us to scale. So that was a huge win this year.
Now let's talk about that for a second, because just for what Zach did, just that attitude, that mentality, like, hey, I got laid off. I can sit around and just collect the really good unemployment benefits back. And I was like, no, I want to do this. I want to grow here. I want to do that. I want to hustle. He saw the opportunity and he went after it. He was proactive. He was on the offense. And there's always opportunities like that out there for people. Look at people, you talk to people all the time. Like, I want to get into real estate, I want to do this. I'm like, great, what can you leverage your skill set from your job, your business, your previous life? What can you leverage to get into here? And you have to be proactive. Someone's not going to call you up out of the blue and offer you an amazing opportunity on silver platter. Right. You have to go out there and hunt for it and figure it out and be proactive and ask for it. And I mean, that's what he ended up doing with that. So I mean, just dude, that's the right attitude, man.
Unbelievable attitude. He, him reaching out and he really knew that he wanted to be in multifamily. He had loved the asset class. He had been reading books, listening to podcasts. He had heard about.
Oh, he wanted
our
to grow in that direction too?
He knew he wanted to be in multifamily. Yeah. So when he met us, he was like, "Listen, this is exactly what I want to do." I mean, he took a pay cut, huge pay cut, to come work for us because he believed in the upside, the opportunity, and he really wanted to be part of a team that was building and doing multifamily and on that side in that asset class. Super thankful. He's been unbelievable. I love his attitude, his work ethic. He fits our culture, and he's really bought into the way that we, do construction and the way that we're able to cut cost and still deliver a really affordable, safe place to our tenants. And it's allowed me to be here, right? I mean, a year ago, I didn't have the bandwidth to do as many podcasts as we've done, create as much marketing as we've done.
You're on job sites and the pro desk with Home Depot, right?
I was taking calls from Home Depot 4 hours a day. I was on job sites 6 hours a day. Yeah, I mean, that was my
remember
life.
I got to authorize this credit card transaction from this guy at Home Depot.
Oh, yeah, all that. So that was great. So that was number 3 from a year ago. Number 4 was film and record 20 ride-along shows with Chris Lopez for Bigger Pockets. So this was one of our big initiatives. This is a show I really love the idea of because it documents every project that I do, and it takes someone that doesn't know real estate but wants to learn more and lets them get a firsthand view of how we do the entire thing from A to Z. So how did we buy it? How did we source it? How did we finance it? How did we lease it up? Are we going to sell it? Are we going to hold it? How did we underwrite it? And I just love that story because that's how I learned. So I love being able to document that process and share it with people. So that was a win. We got 16 done, not 20. And the reason for that primarily was we had to pump the brakes because we were working on other initiatives for Bigger Pockets and had other more important things going on. We learned a lot. I really believe that it accelerated our relationship with Bigger Pockets as being a contributor, building relationships, proving ourselves really that we could deliver a really good product that people were interested in.
Yep.
I do believe that we helped a lot of people and people found it, somewhat entertaining, maybe not as entertaining as some guys that are funnier than you and I, but they found it interesting because we provide a lot of value from the real estate side. So are you and I the funniest guys in the world? No, but I think that people enjoyed seeing how we found properties and learning the entire process from A to Z. And I love that. It brings me a lot of fulfillment. I want to help people, and I want to be able to document my journey of real estate. So I think that was a big win. And we're going to continue to be able to do things with Bigger Pockets, which I think is going to be really great. Number 5 was 12 mastermind meetups with Chris. You and I have always been kind of skeptical of these paid masterminds. I actually was in one earlier in the year, and it just doesn't fit my business philosophy.
It's not your culture, right?
It's just not what it's not really what I need. A lot of people in masterminds need that to be like motivated and to hold themselves accountable. I hold myself extremely accountable. I consider myself very motivated. But what I need is to be able to bounce ideas off other people, talk to the people in real estate, hear what they're doing, really talk about HR, operations, and just ways to be more efficient and talk to colleagues that are experiencing the same kind of pain points that I am. And you and I have been able to do that. It's been a breath of fresh air. I love talking to someone else that thinks high level, that has a similar, kind of drive and goals and those kind of things. So it's been great. I think we met way more than 12 times, and I'm looking forward to continue to do that in 2021. I
totally agree. So let's talk about that for a second, because I think that's when you go on your 2021 goals, because we've both talked about this. It's always been, I've had this throughout the years. I'll have more throughout the years. We'll continue doing what we do together. But for people out there wanting to go create this, like it's tough to go out there and find those relationships. A lot of times they do find these paid masterminds or paid consultants, which, as you said, that's generally not our flavor.
Right.
Either to join one or to charge them and do them. It's just not what we want to do. But what advice can you give for people out there to find a buddy or a partner, go out there and find someone that is like-minded, go out there and do some accountability and some masterminding, whatever they need? How would you suggest people go out there and find it? Because ours happened organically. Then at some point, I started to catch up. It happened organically, and they're also like, hey, let's set a goal here and meet once a month. I can't remember why we said that, but something triggered that, like, hey, we enjoy talking together. Let's get a little more formal and just unplug for an hour and have a.
Yeah, I think at the end of 2019, you and I were just sitting around in your office and just said, hey, what would it look like to be more intentional about meeting with no agenda, just to talk about both of our businesses and how we can improve, which was really valuable. And I think you answered it. It's just organic. It was someone that we had a relationship. It was really comfortable. We were both building parallel businesses in different fields, but both kind of growing at the same time. And I just think you got to look, when you're running a race, you got to look who's around you, and then who can you team up with to get stronger with,
Oh, that was a great metaphor.
And I think, it's probably another John Woodenism, just something like, hey, Louis, if you want to go really far, you got to look who's next to you, on the battlefield or, on the track, and say, hey, let's team up and let's try and go farther together and have less, friction, Because when you're running alone, obviously there's a lot you're going to take everything yourself, and when you team up with someone, you have someone else that can weather the storms with you, and you're not going to get, as impacted by disappointments and things that come your way. So I think that was, that would be my advice. I think that there's all kinds of meetups and all kinds of things you can be doing, communities, on bigger, one of my things would be on Bigger Pockets. I think find people. You and I met on Bigger Pockets.
So we got connected.
Yeah, and I think that's a great community. I think it's the number one community for real estate in the country, regardless of your market, to meet like-minded people that are on this journey of financial freedom through real estate, and to reach out to people, be vulnerable, take the initiative, and spend time figuring out how you can add value to each other and solve problems. That's really what we do. We get together and hear what each other's doing and see how we can help each other solve problems.
And occasionally we have a therapy session.
That's right. Yeah, sometimes we want therapy sessions.
Which is what you need sometimes. But most of them is just planning and ideas and like, oh, about this or that. Oh, it's just a good way to get different set of eyes to give you some ideas on there.
Yeah. So I didn't write this one down, but I was actually thinking about it this morning. It goes along with your goal of fitness is, I've had a trainer for the last couple years. We normally work out 3, sometimes 4 days a week, 5 a.m. It's been really good. And, one of the things that I want to incorporate into that is just, spending more time in really focused, intentional, like prayer in the mornings. I think that it really, getting back to like my childhood roots of faith of, sometimes you get so busy and I get so consumed with, work and goals and tasks and putting out fires, and one of the things I've been doing the last 3 or 4 weeks, it's, just given me tremendous perspective and peace, has just been starting every day with just deep prayer, just getting on my knees, praying, writing things down that are on my heart, and then getting into the gym. And it's really just given much more perspective to the day. So I think that's one of my 2021 goals, is just really starting every single day with prayer and just being very intentional about that,
Yeah.
And I think that's something that for me is going to really give me a lot more peace and focus throughout the day, of just starting that day in that manner. And I've done it, on and off throughout my whole life. But this year, I really, as business is growing and there's so many different issues and, people, managing people is super difficult. Anyone out there that's owned a business, it's very difficult. It's the hardest part about what I do. And I really need wisdom and I need peace. And I think that is going to come through prayer in the morning. And so I'm really excited. I wrote that in my journal yesterday of, I'm going to start every day in 2021, with really intentional prayer, and then hit the gym. So often I get up at 5 a.m. It's like, I just got to get to the gym. And it's like, let me take one step before that, pray.
Dude,
and then,
if you can consistently do both of those, that, talk about the best cup of coffee you could start the day off with. I mean,
I agree,
you get your everything on your body and your mind and everything just like balanced and ready to go.
Yeah, so I'm excited about that. So I didn't write that one down, but I was thinking about that. I wrote it in my journal yesterday, and I was like, this is something I really want to commit to for 2021. So that's the first thing. The next thing from a business standpoint is 2021, I'm going to transition from syndication to raising a fund. The primary goal there is just efficiency and scale. Is we were able to raise $11.5 million in 2020 to do roughly $30 million, a little less than $30 million worth of multifamily deals in 2020. And in 2021, my goal is to raise $30 million of equity to buy $75 million of real estate in Denver and Des Moines. The same strategy, multifamily, value add. Our focus is going to be 100+ unit properties. The same strategy.
So going bigger too.
Going bigger. Yeah, just to, it just makes sense. We've spent, I've done several larger properties in Des Moines. It's the same amount of work. to underwrite, to finance, to manage the construction, and it just makes a lot of sense, and it's been some of the best returns that I've had on these properties that I own in Des Moines. And the one that we've done in Denver that's 95 units has been great as well. Not that 25, 30, 40 unit buildings aren't great. Those have been great. I've learned a ton. But it's the same amount of work to just add a zero. And so that's what my goal is going to be. So I'm going to basically reinvent myself for the third time. So I started out flipping, then I got into smaller multifamily. The third iteration is going to be I'm going to focus on larger multifamily buildings. Now, most people you talk to in Denver are going to say that's really hard, nearly impossible. I've heard that for the last 5 years on everything that I've done. So I'm not going to be surprised about that. But that's going to be my goal. I think that there's going to be a lot of challenges. We're going to learn a ton. But ultimately, I feel like that's going to be the best return on my time and capital is focusing on those larger properties and doing it inside of a fund where we have the capital already committed and I can just go focus on sourcing the deal and executing the business plan. Currently, I would source the deal, raise the money, then execute the business plan. And lining those all up, although we did it and pulled it off, it is pretty challenging, and especially in a year during a pandemic. So we got some feedback from some of our larger investors, and they said, hey, we would love to just create a fund around your strategy. Now, the upside for them is they get better terms than the syndication because they're committing capital. So it's almost like a blind investment. I mean, they still get to see the deal, but they're saying, hey, listen, we're going to allocate this much capital to this strategy, and we just want to see you do the same deals. So that's what I'm going to do in 2021.
And let me repeat this to make sure, because you explained this to me the other week, and getting the nuance of the difference. So syndication, go out there, find the deal, and then you go out there and then find investors to help raise the money for whatever
that specific deal.
Yeah, that deal. Where the fund is just you basically have, is it basically money sitting in an account or just money committed that, hey, once you hit a deal that hits these metrics, hey, we're going to invest.
That's exactly right. So we put together a deck and an offering that says, here are the terms of the fund. The minimum investment is going to be $1 million. The seed investment's coming from our existing group, small group of guys, of $15 million. I'm going to go raise another 15 from a couple different groups. I think the most we're going to have in the fund is 10 to 12 individuals or entities. They commit to, here's the buy box. So we have to commit to, here's what the fund is going to buy. And every group is going to have the commitment. So $1, $5, $10 million, whatever the number is. And then pro rata, when we buy a building, they have to fund within 5 days. So, and we give them a deal memo saying, hey, we have this building under contract. It's going to close in this amount of time. And then it's closing and they have to fund within 5 days. So the money isn't sitting in the account, but it's basically raised and committed. We just call the capital once we have the deal.
Gotcha. Okay. So, dude, that's impressive. And you talked about your third iteration of you going from flipping to medium multi to large stuff, dude. It's been fun and impressive watching you go through the iterations, and it's just continuing to getting better and competing against yourself and playing the next round. Yeah,
and you've seen and heard about a lot of the issues. It hasn't been without a ton of challenges and a bunch of failures.
Oh, it's not been easy whatsoever, no.
It's been insanely difficult. There's been so many challenges and a ton of fires, but I've loved it. I've learned a lot. I really enjoy the challenge. I enjoy what it brings out of me. I enjoy seeing what it creates for other people. And it's really what I feel like is the highest and best use of my time is being able to, allocate capital to undervalued multifamily assets and reposition that property to make it a better, livable place for people and create a great return, for our friends and family and investors. And that's something I've just continued to fine tune and really improve. But it's had a ton of challenges and it'll continue to have a ton of challenges, but nothing really worthwhile that I've seen doesn't come with a lot of challenges. So that's just kind of par for the course. But that is, my goal. Maybe we won't raise 30, maybe we won't raise more. I don't know. I think that 30 is a pretty realistic goal, and that's what we're going to target. And the goal is to close the fund. So basically stop raising money at the end of March. So the second goal for 2021 is I really want to hire, and we just talked about this, managing people. I'd like to hire a COO in 2021 that basically runs the day-to-day operations for the company. So essentially the punchline is, the highest and best use of my time should be used sourcing opportunity, meeting with brokers, meeting with banks, raising money, and I want someone in the office being able to manage the different parts of the business, which is, the brokerage, the construction, the asset management, and everything that's going on in the office, property management. And there's a lot there. So I'm looking for someone really seasoned with experience in construction, in commercial real estate, multifamily, and really understands property management and can, at a high level, manage all four of those businesses and pieces of the business. And so I think that's going to free me up even more. It's similar to hiring Zach, freed me up to do what I did this year. I think hiring a COO is going to free me up even another level to not be required to be in the office and manage the day-to-day. So, maybe Q3, maybe the end of Q2, I'll be able to hire that person. There's a couple people I have in mind, but anyone out there listening that thinks that they're qualified for that kind of position, I'd love to talk to you. And that's really what I'm going to be looking to hire this year. That'll be the key hire for 2021.
One of the things I highlighted on your notes here, Terrence, was to double down your strengths and hire people around you to do the rest, which is basically a Gary Vaynerchuk quote or one of his mantras he says all the time. So double down your strengths and hire people around you to do the rest, and that's exactly what you're doing. And I think, aside from the time, just all the mental freedom and emotional freedom that'll give you is going to be huge, because it takes a lot of mental and emotional energy to deal with all that stuff.
Yeah, I realized a long time ago, managing a large group of people is not my strength, and it's not really what I enjoy doing. I really enjoy working with people. I enjoy working with brokers to get deals done. I enjoy working and managing a construction crew to get a job done. But managing people in an office to do certain tasks and really micromanaging and all the nuances that come along with creating that culture, that's not what I'm really good at, and I don't really enjoy it. It actually is really draining for me, and I'm not good at it. And so a long time ago, I just, by asking several mentors and people close to me, it was, what are my strengths? What are the things that I do really, really well that bring me the most fulfillment? And which is that quote is, what's the highest and best use of my time? And let me focus on that. And I'm going to hire people around me to do the finances, to handle the day-to-day stuff. And the next step of that for me will be hiring a COO. And I hope that I'm able to do that this year or in the near future. And, like you said, hiring talent's really important. Getting people that fit the culture, high integrity, high energy, that understand the business is going to be huge, and that's going to be a big goal for me this year.
Dude, I love it.
Yeah, and then the last one that I have, so 3 goals for 2021, I really tried to condense it so that I could be really clear in my focus, and that is going to be to create more content with Chris Lopez and Bigger Pockets. So you and I, we did 16 ride-along shows. It was the first time that we did anything with Bigger Pockets. I think it was a huge success from the standpoint of deepening our relationship, being key contributors on their YouTube platform. I'm actually going to be a guest on their national podcast January 18th. So that's going to be a huge honor. I'm really excited about that. You played a huge part in that. And just
to clarify, that's when it's being recorded. It'll be published later.
Right.
So, I don't know, a couple weeks, a couple months after that.
Yeah, February, March. So I just think that, even though what you and I did was a massive undertaking, I think that the benefits are going to pay off just based on that relationship. And, one of the things that we're planning is we're going to have a YouTube multifamily podcast. We're going to redo your studio. We're going to have guests flying in. We're going to have in-person conversations with some of the top operators around the country. Some of these guys are right out of college. Other people have been seasoned vets. We're going to talk to people in construction, talking about the best ways to renovate and to kind of hack multifamily properties from a construction standpoint, property management nuances. We're going to talk to brokers on the best ways to get deals done. We're going to talk to banks and agency lenders. We're going to have a ton of really relevant to multifamily guests on the show. We're going to record it, document the whole process. We're going to do Q&As every week. I think we're going to have some great content that's going to be hopefully entertaining and provide a lot of value to the audience nationwide. And I'm super excited to do it with you. You and I have built a great rapport. I think, we do a good job, playing off of each other and bringing out what we need to out of the guests. So I think it's going to be awesome. And, the ride-along show really led to that. So even though it was a ton of time and energy to create them, I think the net effect is going to be huge for both of us.
And let's talk about that, because that is something where, it's evolving again, which is that's how most goals and projects are. They're going to evolve. You're not going to sit go, oh, I exactly did that.
Right.
It's very rare, at least for me, it's very rare. Hey, I did that, it changed, and now it's evolved, now doing this.
Right.
So it's one of those things we took, 10 steps forward, couple steps back, and then we're going to take 20 steps forward again with this new podcast, and it's going to be great for our learning, great for mentoring others, and just great for networking, and should be that fun, fulfilling thing we've talked about throughout the podcast.
Yeah.
Like, I can't wait for it. So we're still working on details right now, internally, the process, but the studio the plans are underway to get it rebuilt. We're working on details, bigger pockets. We have guests already buying plane tickets to come out in January.
Right.
And it's going to be all the stuff Terrence talked about. But I think what I'm excited about in addition to all that is it's going to be in person. Because most podcasts, the two things that I can tell a lot of times they're all done over Zoom or, whatever virtual chat they're done over. So the audio quality is plenty good there, but the conversational quality is less. Like, it's such a different conversational quality of us like sitting across the table to each other versus us doing a Zoom call.
Right. It's
just so much for having in person. And we'll be able to get to do that long form format where, a lot of the podcasts, I call it people who go do the podcast circuit. It's a lot of times the same people across the same podcast can ask the same questions. And with the format we are working on, I'm not going to talk about it because we're still figuring out the details. We're hopefully going to be able to change it up and do something that's not the same format and the same questions, but just spice it up. So hopefully be more fun for the guest and hopefully just a different perspective and hopefully allow the listeners, or I should say viewers on YouTube, to grab that one nugget out of every episode or every person and say, great, and go apply this to my business or my investing then. I think it's going to be very fun and very fulfilling.
Yeah, 100%. Well said, and super excited about it. I think we're going to have very interesting guests that most people haven't heard of. They're going to have great stories. They're going to be able to talk about unbelievable stories of taking down properties and how they reposition them, and we're going to be able to document a lot of great things and provide, interesting, valuable, relevant content in the multifamily space, which is what I'm really passionate about.
All right, so, dude, I'm impressed that you boiled down to 3 goals, and these are 3 very, very big goals. So, you got any final thoughts on here? Anything you want to throw in? Any goals that are bubbling in the background?
I think, as I look back on 2020, it was a super difficult year. There's so much pain and conflict going on in our country and in business, and so that was really heavy on my heart. My wife and I had our second child. We had a son named Noah. He's now 7 months old, so time has really flown. We had him in May, so in the middle of COVID, similar to, I think, you had a
No, ours was pre-COVID. Pre-COVID. We avoided that stress ball.
Oh, yeah. So so ours was a little bit before, after yours. And I just was overwhelmed with gratitude, looking back at the year and all the things that went on, how we were able to overcome them, what I was able to learn, the people that I've been surrounded by. I just feel super fortunate with a ton of gratitude and, really thankful for you, thankful for the community that we have here in Denver, from the Dyer Network. Multiple people have invested, in our projects this year, and really enjoyed meeting a lot of the people in the community, hearing their stories, seeing their goals, and seeing how, we've been able to hopefully add value to them through my experience and being able to provide to them great returns in our projects. And so I'm just really fortunate, very thankful, and I just wanted to, end it with that. Even though there was a ton of pain and a lot of difficulty and challenges, as I look back, I'm just really filled with gratitude because I think we have so much to be thankful for, and we learned a ton.
Well said, and a great note to end on. Terrence, dude, this was wonderful. I look forward to the YouTube Bigger Pockets content, the masterminds, doing more content, everything. It's going to be a really good 2021.
Yeah, I'm excited. I'm excited in a year to look back and see how we did.
Yes. All right, everyone. Again, if you want to contribute your chapter to the 2021 guide, click the link in the show notes or send me an email. I'll send you that link. But we want you to contribute, to hold you accountable, to learn from you, to network, and just to help you achieve your goals.
Yeah.
All right, everyone. Have a great one.
Later.